All right, this is part 2 of RESPA, Real Estate Settlement Procedures Act, Regulation X. So, what is a settlement service? A settlement service is any service provided in connection with a prospective or actual settlement. So, what are those services? And of course, there is exclusions of those services. But those services is the origination of the loan, and within the origination of the loan, we're talking about loan application, loan processing, and the underwriting and funding of such loans. That's a service. Another service is service by the mortgage broker, including counseling, talking about application, obtaining verifications and appraisals, other than processing and origination service, and communication with the borrower and lender. That's pretty much the job of the broker. Another service, or can be considered service, is any service related to the origination, processing, funding, or the federal related mortgage loan. Title services, including title searches, title examinations, abstracts preparation, insurability determinations, and the insurance of title commitments and title insurance policies. The following services are not related to RESPA or subject to RESPA rules, provided they are not active in the mortgage loan origination process prior to settlement. The ones that are excluded, because they are considered post-settlement, is building, remodeling contractors, services and repair contractors, mowing companies, moving companies, landscaping companies, and home improvement or design companies. Now, RESPA came out with what are covered transactions. What are transactions that are covered under the umbrella of RESPA? Well, that transaction means that is any secure by the first subordinate lien or a residential property located within the state upon which is constructed or will be constructed on one of to four family structure. So if it's say you build in a fourplex, is protected under RESPA. More than that, it's not protected. And then the owner have to occupy one of those apartments, or have to be a resident if it's a fourplex. The owner of the loan have to be occupied. And this applies to conventional loans, FHA, VA, or any government-sponsored loan, USDA, purchase loans, reverse mortgages, assumption of mortgages, refinances, property improvement loans, equity line of credit. Some of that are not covered, and I see a pattern is that the pattern that I see is that RESPA doesn't get involved because it's an absolute. For instance, all cash sales, sales where the individual home seller takes back the mortgage. You don't need to be again giving the settlement documents. Business loans for the purpose of a business, RESPA doesn't involve. Assumptions that not require a lender's approval. Assumption that does not require a lender approval. So see, the lender, there is no money being lent per se in a lot of these. So in a lot of these exclusions that are not covered. Loan conversions. I mean, they already got the loan, so the lender is not really getting involved. There is some exceptions like temporary construction loans, as long as the permanent financing of, as long as they're not gonna construct 1 to 4 family residential property. So a temporary construction loan is not covered under RESPA, Settlement Procedures Act, as long as they're not gonna build 1 to 4 family residential. The owner's gonna live there, residential. Bridge loans, they're not covered. Or vacant or an improved property, unless, once again, they're going to construct and move in within the next 2 years of the construction. Then all these settlement procedures have to be involved. And bona fide transfers of loan obligations in the secondary market. So, in a nutshell, pretty much where the lender is not involved, RESPA does not play a role. And RESPA plays a role 1 to 4 family residential property, 1 to 4, as long as they want to live there, and then less than 25 acres.